Today, very, very good topic. It's one of those topics I'm kind of very fascinated. I'm going to show you the younger side of me today. Do you mean me my younger side or not? Younger side, that's right. You will see younger side of me. Now, do I still look old? Right? Some people say I'm still young. I still got a lot of hair, you know. A lot of my classmates no more hair, you know, all bald, you know. Okay, never mind. That's not about me. That's all about you today. Okay, so we will look at the battle of the trading master turtle trading system. Now, type in there, how many of you have heard of the turtle trading system? Type TT, okay? That's how we differentiate. TT means you heard. Those of you who are listening from Get Response, type TT there. At least I know you guys are paying attention. If you have heard about turtle trader, type TT. Can you do that? Okay, I appreciate that. Then at least I do know what, yeah, okay, great. Many of you heard it before. All right, wonderful. So just going to give you a bit of background that some of you may not know and you know, just break it down for you. Turtle trading system. It's not really a big mystery that most people thought of, but volume spread. And so it's about the battle between two. So we will have our two speakers to join us in also. Okay, great. Now let's look at what we have to offer here. Okay. Now, of course, those of you who are first time and some of you who are type 1 first time, you can subscribe to the YouTube channel that we have, because some people did text me today, Martin, you know, your talk is very good, it's informative and it's free. Most important, it's free, right? So I'm busy because my family, because it's a Saturday, so can I watch it? I said yes. Just go over to YouTube and subscribe. All our video that we have, we actually upload there, so you can actually use the information that we have to make the right decision. I think that's really important too. So make sure you get there. You can see the 4 top glove in there. I'm going to give you an update from that talk that you see in this right hand side of the picture, which is the Kosan, Hatalega, Supermax, and rubber also too. So make sure this is good information. Okay, so you can get your camera ready and take down. All right, and don't forget, we also have our smart Robbie. Thank you very much for your support, and you've been sharing it well, and I did get very good feedback. Good ones, we will continue to work on it. The bad one, we want to improve. One of the things that people did send to me is how do I clear the chat history on smart Robbie, because they went through, because after office hour is free, so wow, they like spending 3-4 hours, so a lot of chat in there. Unfortunately, according to my my team, you need to uninstall or uninstall and reinstall, or you can go to for the Android section under the app setting and delete the history there. Okay, so that's all you need to. But I tell people no need to delete, because you want to keep track of some of the picks or recommendation that Robbie has, because then you can track how good or how bad he is. And also don't forget, do share with your friends. Those of you who have, you get 200 free credit. And so, all right. Now let's look at the rubber glove. Okay, the rubber glove update that we have. I think this is important because some of the members and the public did write on to me and said, hey, you know, can you tell me about what's happening to rubber glove? You know, such a big volatility on Thursday. It falls so much. And we all know, right? There was one of the company subsidiary of Top Glove, and this got Tan Sri Lim, Tan Sri Lim Chi, I think. Okay, never mind. I will get it right the next time. I just call it Tan Sri Lim. Okay, and he was sort of in a crisis management mode. He came out and he gave a very good contention in here, but also supported by a local analyst. So I think many of you know about it, but those things you don't know, it is one of the big headlines that hit us. It's because there was issue about exploitation. You know, workers generally with their passports has been withheld, and they are paying very big commission to what we call the foreign brokers who bring all this, and because of that, maybe some of the wages has not been sorted out. And this, because of this, is one of those activists, a trademark of American activists against a big corporation. They go and report to the U.S. Customs and Border, and then that's why kena lah. That's why you kena. So because of that, and so they sort of put all on detention list because they ship all them by container, and actually it does make a lot of sense. One of the analysts do say, you know, like it or not, they cannot buy from China. Who else make? You tell me. Thailand also Malaysia, isn't it? Some of the inside, because Top Glove have one factory inside there. So only Malaysia only. Who else can they buy? Even you buy from the distributor in US, which could be part of Trump crony. They will crony, but actually still come from Malaysia. Maybe not Top Glove, is either Kosan, Hatta, and things so. So that's that itself. So what happens is Tan Sri Lim has formed a team with a US consultant to really sort out this mess. And he given himself 1 month. No need 1 month, one day, a Friday already turned. Correct. You saw, right? I was also amazing. I thought on Friday morning, top glove's going to turn. I don't have top glove, but I have Hatta. I still have a lot of Hatta. Not a lot. I mean, I sold as it goes up. And I told some of the members too, do sell as you go up in there. And those are keeping it. So what they are saying also, this information, so-called the rubber glove, you can still keep it in the US shore in case if not, they'll ship it to Canada or South America for that one. So while waiting for decision, because within 1 month they will sort it out. Okay, so within the same line also at the rubber glove, what has caused this is because if you look at that was the big drop that you see here. Okay, let me just bring up a laser pointer here. So this was the big drop, and then open gap down, strength comes in on the low bar, market go back up. Okay, now what really caused this was the news that was compiled by Edge CEO. So you can see top glove, very important now. What's the top glove's price now? Okay, top glove's price is $22.98. All right, $22.98. So it was $22.98, and then the market break back up to here. It went down to almost $18, a big drop, then kept down open. And by the time people really absorb this news, the consensus of top gloves, you can see on the right-hand side here, right? At that time was $22. So what they are saying with the average selling price, if you don't know what I'm talking about, average selling price, go over to YouTube and watch that video. I break it down for you about the average selling price in there so you understand better. And then it talks about the target price. Now, this is really funny, You see, the target price, which I'll show you in here, it's about, everything is $30. Even Tan Sri Lim also say a Tiga Pro, everybody says $30. And they updated this on the 14th because of the increase of the average selling price. So things shot up. And then really, there was a big hoo-ha. And as the news get absorbed in, people say, hey, this sell down is an opportunity to buy some more. So they go and buy some more. So that's why you saw this bar going up in here. All right. So this is what we've seen so far. Now, one thing also, another good analyst today, that's right, on the Star Business. So I got this for you. He started to toy with the idea of tanks. You heard of FANG, not? How many of you heard of FANG? If you heard of FANG, type FANG, F-A-N-G, okay? Microsoft or Netflix, okay? All right. So what he said, FANGs was responsible, Microsoft here was responsible for the big growth, the tech big growth that you see right now, right? While the remaining of the 49 were really upset. So it's the same thing now, what we're seeing here. So what stands for tanks? THKS. So what they're saying, tanks stand for Top Glove, Hatta, Kosan, and Supermax. And this will be the growth for Bursa. And that's why you can see Nikkei is going up higher, correct? Higher and higher, right? And we have, sorry, not Nikkei. We see US market, Nasdaq is going higher and higher. Our Bursa will really crack 1618, which is the 30th December index. So thanks. What do you think? Tell me what you think. Is it going to go up or down? THN, especially those of you who are listening from home, right? Do you think our Bursa will crack and go higher than 1618? Now, based on why I say this is because if you look at it, Top Glove got berapa, how many percent more to go up? $30. Okay, now it's $23, another $7 more, right? So along the same news, I'm going to just share it on, move on to my next slide. Right now, this is also from the same report and analyst. Now, those of you lazy one, I know many of you are lazy, don't want to read Star Paper or whatever. I read it for you. I even subscribe to it. I purchase, so I sort of shortcut for you. Okay, so what is simply say, you like it or not? Right? Some of my member and clients say, "Oh, Martin, now I don't read newspaper. I just listen to your morning show." I said, "Good, okay. That's because I want to break it down for you so you understand." So what he also say in here, if you look at this report, now I circle that one, right? Top Glove, Hatta, or tanks, right? This call it tanks. America got FANG, we got tanks. Now I'm very proud, Malaysia. Oh, we got tanks, Good, no, it's feel good from a stock market investment standpoint. Okay, so you can see Top Glove, Hatta, Supermax crazy went up 1,000% there, you can see, right? So what is this newspaper very important? And he says that, right? So there are two stocks which is still undervalued, All right, this not from me, this from analysts. This from analysts in Star Business. If you don't just go and buy, maybe after finish this talk, you go run down to the petrol station or the news store and you go to the business page. You can see this there. So what he is saying that, look, there are 2 stocks can buy. We still have 22% for Top Glove. That's why I make it easy for you. And there's one more Hatta Lega at 12% upside. Okay. The fair price is $28. It's $22.98. Of course, just now you saw the consensus by all the big analysts are all talking about 31, 32, 35, 37. So how? No, you just check out. Don't believe me? Just go and see a CNN. Also open up CNN. Like behind me, I open up CNN. So many cases. Florida already 77,000. They have to use rubber glove or no? If not, use what? Use leaf. US people use leaf. Okay. So what do you think? Do you think you will buy Top Glove or Hatta? Please type it in there. Okay. Please type it in there. So I want to see what you all think. Would you buy Top Glove or Hatta? All right. I have Hatta. Okay. Of course, some people say, they're very expensive, Martin. How about rubber racks and glove? Can. That's the chart wise. So if you know how to read chart like some of our members, then go and buy. If you don't know, then go through all our tutorial and if you already joined our masterclass. Okay. So rubber racks and comfort are the cheaper one. They also going to move on. Okay. What do you think? Just let me know. Or buy both. Okay. Yep. Those 2 tops are really expensive. That's right. But look at the upside. Just buy 100 shares. Gene. All right, so that was my message. Okay, so enough of the rubber glove. Just want to make you guys at least up to speed. And my job is to get you up to speed on all the news on the market, the KLSE, and catch me again on the breakfast show. All right, let's move on before I pass on to my thing. So again, US is going higher in here. What do you think? Okay, let's talk about US. US is going higher and partly right now Dow Jones is 26,600. Now, no doubt last night closed about down 60 points. They may have a bit slight pullback just to around 26,400 in there. But what do you think? Do you think US Dow Jones is going to go up or not? Right? Let me know. Just type Dow up or Dow down. Now, very important is to ensure this vaccine, okay, vaccine. Now, vaccine will cause the rubber glove to come down a bit. So keep in mind, this is where Dow Jones will go up, the other sector tech will go up, but rubber glove will come down. Because once the vaccine comes up, people say, no need to use so much. And remember, on the show that I talk about in the rubber glove, okay, make sure you catch the one. I did talk about another factor, the WHO. Anybody remember what the WHO is going to say? All right? Okay, if you don't, just check it out in there, or if you have a chance when you bump into me, do ask me too for that one, because I want to make sure you guys do well in the sector that we talk about. All right, so also fuel prices is going up, vaccine is going up in here, and that's the price. So technically Dow is on the new bull market. Okay, like it or not, I'm just gonna keep telling you, we are in a new bull market. We have 10 years of growth. COVID-19 started in February, we crashed 40, 50%, depending how you define it. And now the market has recovered. Why? Vaccine is there. Economy is reopening. That's how you want to see it. Okay. Now let's talk about this. Is the history again. I usually flash this. You can see February 19 was the day that market crashed. You can see a lot of the time during the bear market, right? They're very short. This one is about 40%. When it was updated, was around 26. And I said it somewhere in March 25th. It's going to be a U shape. But instead, it wasn't a U shape. It was a V shape. Because most recovery usually are U-shaped, which is a bit more stable. So now it's V-shaped. Okay, so we're going into the re-election now in November, just about only 4 months only, right? 3rd of November. So every day very exciting for me. Just watch the US news, the bickering between Joe Biden and because by looking at what's happening in US, that's going to help you to make money. If you watch the local politics, I tell you, I scratch my head, man, every day. Anwar, Muhyiddin, Mahathir, Okay, so this one, at least I can make money by just watching all this news. And most important is for me to update you so you can continue to follow me then. Okay, a little bit, those of you who are listening for the first time, yeah, Dr. Gary said they need to wear gloves to inject vaccine. That's quite true too. Okay, this is the trade VSA buy and sell indicators that we have. As you can see, we are still up 1%. Yeah, Friday was the one that we talked about, The analysts came out with the bullish report about all the rubber gloves. What are those 2 rubber gloves which is still undervalued? No, I say one, the analysts say one in Star Business. What are those 2? Please type it in there. You all remember or not? Please type it there. Okay. Now, some of you may say Mother share very expensive, isn't it? There's a such thing called Warren, isn't it? Hata Warren WA or Top Glove Warren WA. More volatile, but at least cheaper. Go and take a look at that one in there. And if you do join our 9:30, do ask Zach about those two charts. Because I'm not going to cover the stock analysis. My job, myself and my students, which in this case are Zach, my two coach, I will cover fundamental. That's my strength is, and then Zach will cover technical. So that way you have the best of both worlds. Because usually last time when we do, I cover technicals. The missing side was the fundamental. Some of my members come and tell me, Martin, you should talk about fundamental too, because many of you who are listening are fundamental. How many of you are fundamental? Just type it in there, right? Or some of you are both, which is fine. I'm both. You need both, okay? So let's move on, okay? And okay, we're gonna go down to the turtles, okay? Now. Turtle came to me in year 2000. Remember year 2000? Some of you, hopefully listening now, are born after year 2000. Right? Year 2000 for me was a year of Tony Blair, and Sync, iPod, Backstreet Boys. Okay, so that was to me was finally how I finally discover about the turtle trading system. That is a picture of me. What do you think of me? That was a young self, okay? This is now in the video below. You see that is young me. Do I change a lot? Right? Lucky I didn't become baldy. Now I got a bit less hair. How do you like the picture there? That's a young picture. Now, why I share with you is because all of us, when we are young, we always have a fascination, right? Some of you who is young right now, right? The fascination about, hey, you know, this trading system, and then only hairstyle change, that's right. Yeah, so you have a fascination of how people do it, right? So that's why I want to do this talk, the battle of the trading master, because I've learned from Tom Williams, and I didn't attended the turtle trading, and there was a big fascination in year 2000 when I discovered it. Now, why it was discovered it? Because at that time there was a big ad came out, the most powerful and valuable and profitable trading system ever. That's right. Okay. So of course, you know, at that time, young men, you know, you and me, young men, we always all worry about what? Money, isn't it? Correct, no, right? So I want to have more income, isn't it? At that time, you know, it's like about to get the first job and you're not sure, you know, there was like very young fool out there. So, you know, this turtle trading, and they talk about, you know, how they can turn 400 US dollar to 20 million. And that was way back in trading futures. That's right, trading futures back in 1992. Of course, year 2000, which is after 18 years ago, because they have an embargo. Do take note. The program finished. Okay, the program finished, but they have an embargo of, I believe, 5 to 7 years, depending how long they are. They cannot talk about it, that they were involved. All right, so which means almost to 1995. Okay, 1995, there where people start to talk about it. And year 2000 was the time that I really heard about it. And, you know, this is where a turtle trader was coming to town. He didn't really come to KL. You know, KL is like, nobody heard of KL. And they actually went to Singapore to teach. Okay, and there was a big hoo-ha on that part. And that was almost a year way back in Utah. So I was saying, wow, and that time, 200 million was a lot of money, you know. That time there was no internet, and you know, when you think about, that's really mind-boggling, and that's what really you know, caught me interested about it. So, and it's no other than this gentleman, Russell Sen. How many of you heard of Russell Sen? Okay, if you heard of Russell Sen, type it in there. Okay. Okay, so Russell Sen was that gentleman at that time. He came over, and he shared his trading system. He said that, look, it's a decade. Sorry, not 5 years. 10 years. They have a 10 years embargo, which means the program finished after, I let you know, 1990. So year 2000, correct, year 2000. So after year 2000, they finally come out with it. So they have to keep a 10-year secret. Yeah, not so today the secret will be revealed to you. So this was Russell Sen. He has an MBA and he has a black belt. So he was pretty smart guy, I would say. And he was a blackjack strategy, and he's trading a system in there. So what he's saying that, look, I made a lot of money, okay, and I'm trading my own futures account, but I'm coming to Singapore and I want to make extra money make extra money from teaching others. And that's what basically Russell Sen did. He's one of the turtle trader. So how did the turtle trader started? The turtle trader started way back in 1984. There was a newspaper classified act. Now, we heard about one of his famous students called Russell San. Okay, we're going to hear from a few more. So Russell San went through and saw a classified ad, a $15,000 ad was placed in the Wall Street Journal way back in September 1984. So what he was saying that the Richard Dennis, which is the Sifu lah, the master from the C&D commodity trading. Okay, so what he's saying is accepting the position of a commodity futures trader and a small group of through a proprietary trading system, and they hope to train a group of people to trade their money. That's all he says. So they are given a percentage of the trading profit. Actually, they'll get 20%. 20% profit. They're given a 20% profit each year. At the end of the year or end of 6 months, they can withdraw that. Right? So everybody apply lah. Okay. So fast forward. Okay. And at the time, of course, these are the more recent picture you can see. All right. Everybody also want to become a turtle trader, isn't it? Because at that time in the 80s was a decade where we see boom in the stock market. Correct, right? There was a boom in the stock market. Everybody wanted to be a trader. I want to be a turtle, and especially the older folks. There were some old, more elderly one. They have plenty of time. They also write in, but Richard Dennis and finally make the decision. So all this wanted to become turtle trader. Now, how many want to become turtle trader if you happen to join, at that time and you see an ad like this? Because there is no fee at all. You don't have to pay anything because you'll be working for Richard Dennis, and it's a training program. Okay. So that was what's happening in there. Okay. So what do you think? Those of you listening there, all right? Okay. So who wants to be a turtle trader when you see an ad like that? Just type TT. Okay. Those of you who want to be a turtle trader, type like that. Or TT. Okay. So good. Thanks a lot. Thanks a lot. At least I know you're not sleeping. So this is what happened, and the ad went out. So remember, 1984 was the recruit year. Way back to 19. And now, why I'm showing you this is because it's important to understand the process. Because many people say, look, I come to attend a course, 3-day course, and then all of a sudden, I will become millionaire after a course, right? Because I want to narrow down the realistics of this. How long does it take to become a good doctor? How many of you are doctors? I know that one of the listener in here are really a doctors inside there. Now, how many years to train to be an engineer? Anybody? Anyway, how long you train to be an engineer or good accountant? Just type it in there, right? Type it in there, right? Yes, it takes 3, 4 years and 5 years. Now, remember those of you who I will talk about the 10,000 hours, Malcolm Gladwell, right? The book, The Tipping Point. Yes, the 10,000 hours. It's the same thing too. So what he's simply saying is, if you notice, the result from some of the best 14 commodity trader that he has, right? All made compounded return, almost 124 all the way down to 38%. Okay, annual return ranging between 89 to 300%. Philip Liu, 30 to 132. Brian Proctor, Howard Snyder, Tom Shank, Jem Gordon. All this was one of the Richard Dennis students because they were kept in the same room. So in the period of 5 or 6 years, because they have an embargo, means they cannot talk about it. After 1990, you take 1990, 10 years old, 2000. That's how I found out about Turtle Trader. And after 20 years, because 2000 it came out, now it's 2020, not many people know. So those of you who type, want to be a Turtle Trader and so forth, you have known about it if you were in the year 2000. So this is more like, just sharing you the system in here. So you can see all the Turtle Trader did pretty well, all right? Okay. So now one of the more famous one, which came out and wrote a lot about was Curtis Fade. Okay, now Curtis Fade was one of the youngest, and he was only 19 years old, and he made about 31 million profit over that period of 5 years. They all started with, I think, they were given about 50 to 100. No, they were given about 10 million, something like that. Right? Because he has about a portfolio size of 40. If you divide by 20 people, so it's about 20 million. Depending, they'll start you off maybe 1 million first. If you do better, they give you more. So Curtis Fade was paid about 35 million of the 20% profit that he made. Right? Is that a lot or not? That's a lot. All right. So the key story here, right? Remember, at that time, 31 million in 1984, 1989. It's a lot. And that time, I still remember a plate of chicken rice was only 1 ringgit 50 cents, right? And you were 19 by the time he graduated. 5 years later, he was only 24, right? So it was really fairly fascinated in here how the kind of money they can make. So I'm sure you're fascinated too. How did they make the kind of money, right? So this was what was really puzzling in here. And the worst performer of the turtle trader was 38%. That's right, it was a 38% at that time, right? And so what happens is Curtis Fade came out and he wrote a book called The Way of the Trader. So some of the most successful traders actually use a mechanical trading system, right? And that's what he taught. I'm going to go into what is a mechanical trading system in here. Now, the founder, Richard Dennis, basically he says, look, it was between these two persons in here, Richard Dennis and Bill Eckhardt. So these are two friends. One is a maths professor, and the other one, Richard Dennis, which is the father of the turtle trader. So they were like talking, you know. He said that, look, you can never train good trader because he's a maths guy, you know, very professor, very academic. But Richard Dennis said, no, it's not true, right? We can actually train people by following a set of rules, and that was a viewpoint, and it effectively tell you how well it works. So that's why Richard Dennis always said, no, you could publish the idea in the newspaper, but no one will follow it. And that's why it's the same thing today. Even today, I'll share with you the secret, right? It's very difficult for you to follow. Now, going back to the question, how many will buy Hatha and Top Glove? Just type in how many will buy Hatha and Top Glove, because later on, when we go through the rules, the turtle rules, right? I want to ask you again, okay? Keep in mind, okay? So do share this video in your timeline if you think it's very informative, and let's talk about the turtle trading system here. Okay, now one of the more famous who talks about is Michael Carr, okay? And he's one of the student of Richard Dennis, and he's one of the worst one, to be frank with you, of all the 14 that you see. He's the only one who came out and talked the most in the book by Jack Swagger on the market visit, and he made about 39% per annum over a period of 5 years. 1 year, 38% now, so which is not bad. So when he went for the interview, Richard Dennis and a couple of his associates interviewed them. They have a team there, and he said that, look, I don't have any experience and I don't know much about the market, right? And I thought Dennis' program traded technically, as he thought fundamental analysis is dead. So what happens was Richard Carr knew at that time they have, because we were trading the futures market, which a lot of them are commodity market, they don't really look at the fundamental. So he thought they only use technical, but actually they use fundamental too. So there was kind of a joke to Richard Dennis because they use both too, right? And he went on about a program, how Richard Carr, so he had no experience before the game trading. Now remember, Curtis Fade was only 19, doesn't even have any experience. One of the members was actually a bartender, okay? And he needed a job after a layoff, just like COVID-19, nothing much to do. So he became a trainee to the Dennis program in here, right? So that's how it is. So if you look at it, none of them really have much of experience, but they all turn out pretty well. And that's why it's so amazing. And when you're young at that time, you can see the amount of money when you make. That's surprisingly, okay? So let's go through some of the key characteristic of the turtle trading system. Now, the turtle trading system is called the mechanical trading system, all systematic. You can see all decision, okay, let me just bring this out, is made following a set of rules, a trading system. And that's what we usually teach also too. In our masterclass and in our one-day course, some of our members have gone through. It is the same what we do. So they were being told what to do and they don't deviate a lot. Now, having said that, we have found over the last few years to get students to follow it very, very difficult because of this. So end up we have what we call a partial mechanical, partial discretion, which people trade. And that's why one of our coaches like Zach, like Arif, they go through it and continue to train and train. But having said that, the turtle trading system is very suitable for newbie and intermediate investor and trader, right? So what we always tell people, and the same thing that we do in our program, just like how we train our members in our masterclass, similar to here, we get them to do a paper trading first. See how well you fare in the history, then later on you trade with a small account. Just like we tell members to also trade the premium alerts on our smart Robbie in the middle, trade with a small amount, just trade with maybe 2,000 ringgit, see how well you fare. Okay, so this is the rule of the turtle. That's right. Now the rule of the turtle here, right? I'm going to get down to the turtle. Is you're given two systems, system 1 and system 2. Basically, that's all it is. There's only two systems only. So what you do is that you buy 50% of system 1, which is a breakout system of 20 days. This is the one you take photo lah, you want to take, or a 55 day. If you notice, 20 days breakout is a 1 month. The other one is 2 months. That's it. 50% you buy on 20 days breakout, and 50% of your portfolio buy in 55. And if you look back on the right-hand side, you see the number of people making money in here from 39% all the way to 120. They were not allowed to deviate because Richard Dennis has a cane. Every day he go and do inspection now. You go buy not? You buy 20 day now, or you buy 55 day. He will check one because this is not your money. You see the difference now? This is Richard Dennis money. But of course, many of you who trade this, say, this is my money. I get scared. I chabut. Or I go in maybe 20 days. I don't wait. I go in at 15 days. I go in 12 days. You see the problem? Okay. So this is why it became kind of very, very interesting going forward here. Why the 20 and the 55 day? And they have done a lot of back tests. This is one of the best optimization in here. Okay. Now let's look at the example in here from Russell Sands. You can see N55, which is a 55-day breakout here. So as long as it's 55 day, you maintain, go higher. So you maintain long. And here's another example. So they trade a lot of the commodities because why commodities has the most leverage. Now, in the same example for Malaysia, if you do not have money, going back to the example of Top Glove and Harlega, you trade the warrants. Warrants are, I think, maybe a fraction of the mother share because I think one of the members say, I don't have money lah. So how? Trade the warrant. So the warrant give you leverage but more volatile. Again, that's why we always say you need to have a proper risk program. It's just like if you do not know your risk, you're jumping into a fast moving train, and what happens? You hurt yourself. Okay, do take note. So I hope that from learning some of the presentation that we hear, you know of the risks that you have, and when you're ready, you may want to join some of our paid program, which we can mentor and coach you better. Especially we have Zach and also Arif too. So in this example in here, you can see using T-bonds, N is 20, means 20-day breakdown, right? Breakdown short. And when you have a 10-day line change up, we exit. That's it, because I'm going to show you the next slide will be the exit. Okay, now the exit here, again, 2 only, all right? 10-day, okay, take picture, you can also take picture. 10-day low, okay, you exit. Means if you long, right, if the market break 10-day, you out. And if you short, go down, you go back up 10-day high, you get out, right? System 2 will be 20-day low for long position and 20-day high. So that's what the Richard Dennis always go around. All this traded in the office. System 1 or System 2. You can trade 50% System 1, 50% System 2 is okay. No System 1.5. Okay. So when you do System 2, you get out on 20 days. So it's very easy to monitor them. All right. Unlike what we do today, a lot of people trade different time frames and they all trade daily charts. That's it. All right. Daily charts, they hold for 55 days. So if you notice some of the interview, they have nothing to do. They play ping pong. Those days, remember, they don't have internet. So they play ping pong. Yeah. So that's it. All right. Remember, what is the rule here? Very simple, isn't it? We talk about, right? N is 50, 55 or 20. Exit is 10 or 20, whether you use System 1 or System 2. All right. That's how it is it, okay? So what do you think of this rule? Simple or not? If you think the rule is simple, give me a thumbs up, okay? So I break it down for you, make it very, very simple using these rules in here, right? And give me a thumbs up, okay? Any confusion, any questions? Anyone from who is listening now? It's very simple only, right? System 1 and system, but very difficult to implement. Okay, yeah, thumbs up. Okay, thank you, Raymond. All right. So this is, let's move on to the next thing, okay? So also here, okay, this is an example in here of the exit. Okay, now let's talk about exit. So if you look at it of the exit, you can see N is 20. So you take the 20-day breakdown lah, 1 month breakdown lah, 1 month or 20 trading days lah. So break down the market trend, right? And then N is 10. Okay, 10-day exit. So here they have a 10-day exit here. After the market break back up here, you exited here. But actually, if you ask me, here also exit 1 already. Exit 1 here, go in, there's another 1 here. Because if you follow the rules, this one is exit. All right. Then here, another N20 breakdown. So you maintain short all the way down. As long as the trend is down. If you look at for some of our members, basically this is stage 1, stage 2. It's even easier. They don't talk about stage 1, stage 2 back in 1984. The stage 1, stage 2 was popular back in mid-1990s. So right now in our market stages, right? Remember those of you who came for our masterclass or call, we always talk about market stages. We have stage 4 short, Then we have the reaccumulation, stage 1, then breakdown again, we're going to a stage 2. So that's basically, it's even easier using the VSA methodology. That's why we talk about, RF is going to come in and talk about the VSA. No doubt the rules are 4 simple rules. The reason why they do so, they make it, is because many of the people come in don't have any skills at all. They just want them to sit there basically like a robot lah. Basically, actually turtle trader basically are like robot, like smart Robbie. Okay, but smart Robbie, they don't have computer, they don't have powerful computer. Today smart Robbie will watch for you. You'll watch out all those premium alert, the line change, the green pentagon. They'll pick all those up and then just pass it to you. And some more is free. That's why I say some of the technology that our company developed, Trade VSA, is so good. It's just that now we really hope that through all the members and who is listening now, you can share this technology. Those days, the turtle trader, they have to, have someone employ them. They don't really give them money, just give them a certain percentage. But things are cheaper in the 1980s. Okay. So you can see this. In this case, the market maintained and it goes all the way down. All right. So the question here is very interesting. The technique and the philosophy behind it is that you buy on strength, you sell on weakness. If the signal come in all once, we will buy all the stronger market and we'll sell the market in here. So this is why I'm going to ask you all now, right now. Now we have strength on rubber glove. Okay. For the US side will be fangs. Okay. What do? Do you going to buy the rubber glove? I know it's the cheaper one. You can buy rubber racks or comfort. What do you think? No doubt the analysts already say overvalue and so on and so forth, but would you buy it or not? Now, what do you think? Okay. Let me know. Okay. If you were to buy, then you would have, right, a likely, because some of them, I think rubber racks or comfort, they are showing N is 55. Or some of them are showing N20, which means it's a 20 days and a 55. And so what do you think? If not, buy some. And else, how are you going to make the kind of return? Now, earlier on, I showed you, right, Supermax. Now, if you follow the turtle trading system and you follow the Pentagon, right, which is like Pentagon, it's actually a little bit of the modified turtle trading system. I learned a lot. I learned about this way back in 2000 through my association with Bill Womack, and we were teaching a lot of course. So I told him I wanted to create a turtle trading system, which was very popular because it was very simple. And over the years, it sort of evolved into the Pentagon system. But we need volume spread analysis. If you just look purely over at the turtle trading system, you just see the entry and the exit. In between, you don't look at the market stages. You don't look for sign of strength. You don't look for sign of weakness. And that was one of the so-called weakness that I see a lot. So when Arif next going to talk about it, the VSA, it makes a lot of sense out there. No doubt. And, you don't really need to go overseas. You can learn it from us too. All right. So buy on strength and sell on weakness. That's the turtle trading system. So they also concluded, look, at the end of the day, the turtle trading system works is because even if they give you the rules, they're not going to make you money. You need to follow them. And to follow them, the key is consistent and discipline. All right. So, but why it worked in the 1984 to 1989 period. But why does it work? Right? Because this is why I wrote the key to consistent discipline. They don't have a lot of distraction in the 84, 89. They don't have Facebook, they don't have YouTube, they don't have Instagram, and they don't have internet. So they just like put you all in one room, right? And you just look at the market, they have terminals, and you just trade. That's why they are so disciplined, isn't it? What do you think? Do you think that's funny or not? All right? Yeah. Sometimes internet is one of the biggest distraction that we get, right, in there. Okay. So let's go on. Now, the other scope of the risk management, trading psychology, buying at safety and lower risk, we usually cover all those in our masterclass due to the time constraint and complexity. Okay, so this is my association from Tom Williams. You can see, some of you see it a lot. So same thing, the turtle trader, Curtis Fade, Michael Carr, Russell Sand, Jeffrey Borden, all also learn from Richard Dennis. Okay, so same thing, I also learned from Tom Williams. Actually, it's a lot of, as a matter of fact, a lot of the Sifu out there, they also learn from another Sifu. They cannot suddenly say, you know, I created this out of nowhere. They all come with just that they don't tell you who they are Sifu. In here, I'm very proud of my association with my grandmaster, Tom Williams. He already said before, which I always told some of our members in here, he said, when you learn about volume spread analysis, you never really have to worry about, you know, your rice bowl. And that's quite true today. No doubt, I don't claim to make millions, but I do make a couple of millions for my client and for myself, all combined together, a couple of millions. More than, I would say more than 5 or 6 million in the past 10 years. We are looking at a small portfolio, which I actually manage for the client. And so what I said, that look, very easy. You come for my class, you listen to our free talk. When you are comfortable, you manage yourself. Especially nowadays, we cover fundamental too. Most of you who are coming in, fundamentals does help a lot, because some of you are technical, some of you are fundamental, but I always say adopt both. Together with news-driven and smart Robbie, you cannot really go wrong, because smart Robbie, you need to listen to him, okay? First total CM volume was, 6th of March 2020. That's correct. So if you can hold on, okay, hold on for that one. That's going to be good. So, why we believe the Trade VSA Masterclass is something that we have done, and it's one of the premium ways. So like what Tom said, you go back and you teach. He said you go back and you teach your fellow Malaysian where you come from, right? And it's going to help you to, you know, trade better too. That's what's from Tom Williams, and actually we put it in our 3-day Masterclass. That's the one you see right now in here. Okay. Now, of course, there are some very prominent students of mine which came to our Trade VSA. I think some of you may know him. This is Nick Esa, who is the president of the MATA from Maybank. Then there's another very famous one for the Malay one, AAA Academy. You can see him. He's also one of the Bursa speaker. You know, he always dress up and he comes out and say, oh, I make a lot of money, you know, a little bit of Russell Sand, you know, right? Also very similar the way we do. Another one is Chef Saham, which is another fellow associate of us, which is many of you actually came from Chef Saham. And he said, no, you go and watch Martin, how he trades, and listen to Zach and Arif too. So he's one of the Saham online in there. And they're kind of been really an ex-student of our masterclass, okay? And not forgetting, there's a few more, right? One is Harrison Ho. He has a website. He's actually a remiser from SJ Security. Some of you may have heard of him, but don't do 5 ringgit per person. Do like me, free. So that was, he has a website called Millionaire Trend Trader. Then there's another one, Brandon Dew, which attended my course a couple of years ago. Now he's one of the SGX academic trainers. So a lot of my students has done pretty well. And then there's another fellow here called JT Low. This is from one of our members. He said that, oh, he mentioned Martin Wong as a big player. I'm not a big player. I'm very small, okay? All I do is that to help you guys who's listening out there to, you know, level the playing field. Because I know when I was like you, remember you saw my young fella picture, so I also want to be rich like you all, isn't it? I heard about Turtle Trader, I so joined, but I try to, you know, put you in the right direction and become what I do. You can see this is where he talks about JT Low. Some of you may have attended his talk. He's now advertising in Facebook. You may came across in here, and this is the ad. He talks about why I want to become a full-time trader, and he contributed a few things and he made some money in there. But thank you for mentioning Martin. I do believe he did attend our course. So we're kind of happy to produce very good people who come through our program in here. And we have lots more too. Now, I believe I learned from my Sifu, and I like to share it so you can also share it too in there. No need to be shy one, tell you where you learn. Like you learn Wing Chun, you learn karate, you learn karate lah, you know, right? So with that, I'd like to introduce you our next student of our masterclass, which is Coach Arif, and he actually co-written a book on futures. He's my futures guy and stocks. So on the Russia Jutawan futures co-author warrior trader. So he's going to take you through on the VSA. And after that, Zach is going to come in and talk more, and I'll come back and give you another inside story of the Japanese VSA trader, which I promise you to. So I will stop. So how far do you like it? You like it okay? Okay, Derek, you know JD from the ET platform. What is ET? Okay. You might tell me later, Derek. Okay, so I would stop sharing here and I'll pass on to Arif. Okay, good. Just right for half a minute. Okay, end sharing.
All right, thank you, Martin. Thank you. That picture was not the younger me, so not too long ago. It's just an old me. Okay, wait, I'll just put in the sound. Okay, I'm going to put my mic in so I will not be able to hear any of the sound coming in, yeah? So anything you can just type or text me, okay? All right, so I'm going to do a screen sharing here. Yeah. Okay. So I'm going to screen sharing and we're going to talk about these volume spread analysis. So as you have known me, I'm Alif. I'm the futures coach specifically for the FCPO market, but I do look in other markets as well on the like edible oil such as soybean oil and also on the crude oil as well. Okay, now we have heard about what Martin have explained about the turtle trader and their trading methods. Okay, so just a bit of a question, or this is something I read it yesterday. Okay, do you know why Richard Dennis calls those who work under him as turtle? Right? Do you know any reason? What's the reason why he used the word turtle? I don't think Martin have explained before, but let me just type down. If you know, just type in out. You know, if you don't know, just type in don't know inside the comments there. I just want to see. Let me just go back to here. Right. Any of you know? Don't know, yeah? Okay, all right. So I'll tell you the reason why the story goes is that when he was in Singapore, okay, he saw how the turtle farmers efficiently raise and grow turtles. That's it. Okay. So this is where he got his inspiration from. He thinks that, you know, I will be able to raise my student as efficiently as how the turtle farmers raise their turtles, you know. So quite interesting to see how these small things can inspire people. Hence, that's why Richard Dennis called his students all the turtle, right? So it makes sense to be there, right? Okay. Now, without further ado, I will start on these slides here. So coming back, I will talk about the volume spread analysis, or VSA, which is a method that I myself and together with the other coaches and our Trade VSA members use and apply. Okay. So volume spread analysis, or VSA, has its roots way back in the 1900s to Richard D. Wyckoff, this gentleman here. Let me just take out the pointer. Okay, so to this gentleman here, Richard D. Wyckoff. He himself was a trader and also an educator in the stocks, commodities, and the bonds market. Right. So Wyckoff lived in the same era, okay, as the big and famous traders and smart money of his day, such as Jesse Livermore, Charles Dow of the Dow Jones, okay, JP Morgan, and many other large operators. And it is through the study of with these people by his conversations, his interviews, research, and that his methodology was created, which is called the Wyckoff method. Right. So in this method, what Wyckoff found is that there is a repeat of similar pattern through a series of market stages that is controlled by a hidden hand called the composite man or the composite operator. Nowadays, we call it the big sharks to some of you, but in Trade VSA, we call them as smart money. Okay, so the Wyckoff method, what it does is that it aims to reveal the composite man's motive and his next move through recognizing bar chart patterns, which provides some insight as to how and why the professional players, which is the smart money, are interested in buying and selling a particular stock. Okay, so Wyckoff also emphasized that it is important psychologically and tactfully to follow the footsteps of this composite operator in order for you to grow your portfolio. In other words, he's talking about something along like a trend. If you see the trend is there, you follow the trend, you do not go against the trend. Okay, so his method was widely used by other traders who, some of them then refined his methods further. And among them, we have like William O'Neill, David Weiss, and of course, Tom Williams himself, in which I will going to show the next slide. This is something I'm a bit proud of because I created it, the family tree of how all things, you know, occurs. The family tree, Richard Wyckoff, and so on, right? So we have here Richard Wyckoff, right, who established the Wyckoff Institute, and the purpose of this Wyckoff Institute here is to teach people the Wyckoff method. right? So the institute was later on bought over by Robert Evans after Richard Wyckoff passed away, and years later on, this institute merged together with Stock Market Institute, or SMI, to become what is now known as the Wyckoff Stock Market Institute. Right. There's another one. If you go like just SMI itself, Stock Market Institute, that one will bring you to a link in one company that is based in India. So that's not the one. So if you want to see the real method of the Wyckoff and also about the stock markets, you go to Wyckoff Stock Market Institute. All right. Okay. So from this Wyckoff Institute here, right, there are many students from here who graduate from here, and I would like to bring your attention to 3 students that I mentioned earlier. The 3 famous traders, which are William O'Neill, David Wise, and this is Tom Williams here. Okay, so briefly going to explain to you about William O'Neill here. William O'Neill is an American entrepreneur. He owns a brokerage firm which he used to trade and still exists until now. Okay, he is a writer who writes in a columns, and also owns a business newspaper which is called the Investors Business Daily, and also at the same time he is an author of a couple of best-selling books, and also not to forget he's the creator of Kensley Method. So if people talk about Kensley Method, it goes credit to William O'Neill. Okay, basically Kensley Method is about a combination of using the FA and technical analysis together in order for you to select the stock and make the trade, right? So his students, there are 2 here. The famous one is Chris Kutcher and Gil Morales. Both of them are PhD holders, but this particular person, the Chris Kutcher here, he is very, what we call a polymath. Okay, I've said in the last presentation of mine on moving averages last Thursday, we have one polymath, which is Victor Niedenhofer. This guy also is another one. I think is much more polymath than Niedenhofer himself, because this guy, Chris Kutcher here, he is a nuclear physicist, he is a singer, he is a chemist, you know, and he's a trader, and a lot of things that he does, and he's very specialized in those things. He even goes to have like a best-selling album or something like that. Okay, so this guy is quite a true genius in his own right. Okay. And then we have here the David Wise, which is founding father of the Wise Wave, as well as he is a trader and also a market analyst as well. Okay, so David Wise, what he does is that he created the Wise Wave. Wise Wave is kind of like an inspiration from Richard Wyckoff's book about tape reading. Okay, you know those times we have one big glass, then will come out one small long strips of paper, you know, we have like then you take the tape and you read it like that. Okay, so it's exactly the same thing. So what Richard Wyckoff says is that, you know, you always follow the wave when you do the trade. So that's why he gets inspiration, because after that, when those kind of machine went obsolete already, he created what we call the Wise Wave volume on the chart. Okay, his students, of course, we have here is Dr. Gary Dayton. He's a psychologist. Okay. And also we have Anna Colling here, who created the volume price analysis, VPA, right? Anna Colling, she is also a student of Tom Williams herself as well, but she can't use the VSA word lah, because she wants to have some sort of like to go on her own, right? So she created what we call a VPA, but it's quite similar to Tom Williams' VSA here, which now we go on to Tom Williams, who is the founding father of volume spread analysis. Right. So Tom Williams, his career when he started, he is not a trader. Right. When he started his career, he is a male nurse. Okay, and he attended to people who are sick. Okay, and he he mostly attend to those in a private clients base. Right. And on one opportunity, he attended to one of this client who is based in the United States, staying in Beverly Hills. There, he's a very wealthy client. All right, so he attends to him. And after some time, he gains his patient's trust, okay? And his patients start to tell him, you know, Tom, why don't you help me to bring out this report, right? And then you map out the price according to the chart there on the piece of paper with the volume. And so happened that this person is actually part of a trading syndicate group in the US. They trade in the US market and the UK market as well. So Tom suddenly becomes involved in trading there, all right? So he just follow and so on. And they also send him to study in the Wyckoff Institute here, all right, where he learned about Richard Wyckoff. And what he found is that, something interesting about it, which I'm going to talk about later on. But from there on, Tom, after that, he just retired and he started his own, which is the volume spread analysis. Okay, he refined the Wyckoff method further and now became the founding father of the volume spread analysis. All right. So what is unique about VSA is that it seeks to establish the cause of price movements, and from the cause predict the future direction of the price. Okay, and one way to do so is to seek the footprints, okay, that is left behind by the smart money in the market. And how you want to get the footprints is by looking at the volume data. Okay, so by combining price and volume, the VSA method provides an edge which enables you to time your entries and your exits as well. Okay, so this is something that Tom had discovered, because at that time there was not much of a volume at that time, but when he sketched, that's where he found that, oh, okay, there's a correlation between Wyckoff method and the volume. So hence we have the volume spread analysis, right? And among of Tom's students, all right, is including Bill Vermeij, which is also happened to be Martin's Sifu also, all right, Philip Friston, and Earl Unler, and we have just now was Anna Colling. Earl Unler is one of the famous trader who entered a competition, and I think within either 6 months or 1 year, he managed to generate around 60% returns, okay, just by trading. I believe either commodities, stocks, or forex. I'm not sure, but it's quite a famous person, and he won either the first or the third place in the competition. Okay, right. So then we have, of course, Martin Wong as one of the as what Martin shared just now, who also created the Pentagon Guider for Malaysia side. Okay, right. So that is the history about the Wyckoff, this one. So we have like Richard Wyckoff, the founding father, and then we have the first generation here, these three gentlemen here, among the many people, and then we have the second generation here, right, including Martin himself, and myself and Zach is considered like the third generation already, okay, of learning these methods and so on. Right. Now, as what Martin mentioned, Martin met Tom somewhere in the around year 2000, in the 10s, I think, okay, and I'm just going to repeat again, but Tom did tell Martin about this, is that, when you study, what you have learned about this, bring this knowledge back to your country, and then you teach your countrymen, because once they have this knowledge, they will never go hungry again. So which means to say that once you learn this newfound knowledge really, right, then for you to go anywhere in the market, you can trade anywhere, and you will be able to make profit from the market there. Okay, right. So we go to the next one, which is the VSA, the fundamentals of VSA here. So the VSA that we have here, all right, it uses the sign of strength and sign of weakness. We use these two when analyzing the chart. So the sign of strength, what we have here will be like the test, no supply, spring and 18-day line change. And then the sign of weakness, or SOW, is the uptrust, no demand, and sell off. All right. But normally we will use just very few out of this, which is like the test, no supply, the uptrust, and the sell off. Okay. So this sign of strength and sign of weakness, what do they do? Okay, is that it's what we also teach in the masterclass as well, right? And this SOSSW is in fact has been simplified by Tom Williams after his intense study and application of the Wyckoff method. Personally, I find that using the VSA method allows me to trade in both sides of the market. Means whether the market go up or whether the market goes down, I'll be able to benefit from it. Okay, and especially true because I'm a futures trader, so we can go both long and short in the market, and definitely you can make money on both sides. Okay, in Bursa, unfortunately, because you can only go for long, you can buy low and sell high, but you can't sell at the high and buy back at the low. There is an option which is what they call the IDSS, the intraday short selling, but problem is that very limited counters, number one. Number two, liquidity is not there. And number three, you have to do the short selling within the same day itself. Can you imagine that? So let's say you're not able to close the position by the end of the day, because you cannot carry forward, you have to close the position by the end of the day. If you fail to do so, then they will charge a penalty. Like the one I heard, they say penalty, one of the broker house, they charge around 7 points extra as a penalty which you need to pay. That's quite expensive also. Okay, but if you trade into the futures market or any markets outside of Malaysia that allows short selling, then you can benefit from this both sides of the market. Okay, right. So we see how's the evolution like for the volume spread analysis. First, it all started with Richard Wyckoff. Okay, this is the Wyckoff schematic charts here. As you can see, it is a line chart and it's based on the closing price. And from there, he do like a schematic where you will know where is the support and the resistance, and also at the same time, you know, when is the time for you to prepare to enter and when is the time for you to exit. Okay, so these are these schematic charts. You will notice that there is no volume at all because volume wasn't available at the time, right? And then also it was put out that a point and figure chart. This point and figure chart is very, very difficult to learn, all right? But if you're able to master it, then you'll be able to make a very good profits. Very difficult to learn because number one, okay, you see all the X's here is X means the price goes up, okay? And 00 means that the price that comes down. Problem here is that it doesn't have any time frame there. It doesn't bound time frame like how we see in the candlestick bars. Candlestick bar, this bar here, you know, is for this date. The next bar here for this date, and the other bar here for the other date. Here, we don't really see at all the time frame there. So it's quite difficult for you to learn on this. But if you're able to learn it, then I would salute you for that, because in terms of accuracy wise, I would say around 90 or 95% you'll be able to make money from that just by knowing when is the price, what's the height of the price is going to reach, you know. So even I heard one of the members for the MSTA also, they say that even though they learn, but they are not able to practice because it's very hard to understand. Okay, so that is point and figure chart. It is available in the market for you to learn, but you are able to digest it slowly, then slowly but surely you'll be able to. Okay, then we have here the open, high, low, close, OHLC. Okay, but in Tom Williams, he always used just the high, the low, and the close bar. He doesn't use the opening price. To him is immaterial at the time because also there's no candlesticks. Okay, so open, high, low, close. What they have here is that you can see quite similar like candlesticks, but it's just that all only on one garisan like that. Okay, if you notice, right, volume will only become available, as on my right side here you can see, right, volume will only become available in the late 1980s or early 1990s, right? So for those of you members here, I believe some of you who learn or go through about the, what you call this, from the price action school of thoughts, right, then you will notice that all the candlestick chart patterns that you learn doesn't really say anything about volume, right? Because volume wasn't available at the time when Steve Nyson introduced this Japanese candlestick method into the Western world. Okay, I did talk about this, also presented about the Japanese candlestick versus the VSA in one of the previous talks. You can go and look in Facebook or in Google, in YouTube. Okay, so therefore, if you see quite recent also, as recent as now also, for those under price action, right, there's not much of subject that touch on or chart patterns that involves volume inside it. If there is also maybe around 5 or 6 of the price action principles that's explained together with volume, but other than that, it doesn't mention inside that. Okay, and then the next one that we have here, that what we all, you and I, are using, which is the candlesticks here. Sorry, the candlesticks here. Okay, and the volume, right? So this is what all of us are using, but some of us also will use like the one that Tom used before this, like this one here. We have one of our ex-member also, she stays in Australia. She can't really gauge on or do a trade if she used the candlestick. She will use more on like the high, low, and close bars, okay, and also based on using the volume ones, right? So this is the evolution of volume spread analysis. So how do we apply the volume spread analysis, the methodology into the chart reading? Okay, so first things first, what we do is, this is a case study, all right? So what we do is that first we determine the market stages and also the trend direction. So market stages, we know there are 4, and the trend direction is either up, down, or sideways movement. Okay, and then the next one will be we identify where is the support and the resistance. All right, and for VSA, we always look on the left side of the chart to determine where is the support and the resistance. Okay, and then after that, we will look into the sign of strength and sign of weakness in the chart itself. Right, if you use by naked chart, then it will be quite tough for you to look at. Right, but with Trade VSA, they have this already. The indicators available for you, so you just see based on the indicators, and then you can gauge from there whether this really the signal is confirmed or it's not confirmed. So it makes you to screen through the chart very easy. All right, and then the last but not least, of course, we use other tools, which includes also like the moving averages, or some of you will combine with other tools as well, like MACD or RSI. But for a VSA trader like myself, I always see based on the price and volume, and maybe just based using on the what you call this, the moving average, just to determine the price direction. That's all. So as we can see here, right, we have top glove. Just bring up the pen. Okay, we have here the top glove and Supermax chart here. Okay, so we can see that the price is moving on a sideways. We see before that also is moving sideways, so I can't put it inside because it will be too small for us to see the screen here, right? So market move on a sideways, then after that it starts to break above the resistance here with a high increasing volume here. Okay, and then after that the market moves sideways here again. Let me just put them here a bit. Okay, I'll just redo back again. Okay, right. So we see the market move up here, then after that the market also go up on and rest around here before it starts to move up, and we see volume starts to increase as the price break out from here. Then we see one side here where we see it as a wash. All right, so what we see about smart money is that what they do is that, you know, the smart money, when they do a program or something to push the price, what they do is they want to buy the price at the lower level. Okay, once they buy the price at the lower level, then they will start to push up the price. And when they buy at the lower level, they will usually buy in a small amount of shares. They can't buy a lot, because if they buy a lot, then it will trigger something. And remember, there are other people who also will look at the chart as well. And if there will be a high or unusual volume or activity, then it will like triggers people to pay attention to that stocks. Smart money doesn't want you to pay attention to the stocks, so they buy at a small amount of pricing there. Okay, then after that, once they buy already at that one particular level, for them to push up, then maybe they'll put in the news or so on, right? To like a small good news, then people will start to pay attention and start to buy, and that's where they start to sell the shares to the those who wants to buy, and he push up the price here. So for them, if let's say they are very bullish, if let's say smart money is very bullish, what they do is they run out of stocks already. Okay, so the price went up already, run out of stocks, so they will do a wash here. Means they will push on the price, they will scare all the weak hand holders, then these weak hand holders will sell their holdings, and this money will buy from these weak hand holders, and then eventually they push back the price up here. Okay, and after you get the sizable amount, which we can see from the high volume here, it pushed the price back all the way up here and unload at this price here. You see the volume very high also, so it unloads. Then the volumes price starts to come down, but we can see that it's being supported at this level, and you see the trend line. Okay, so far the trend line is moving up as well. You can see from this Supermax also the trend line is moving up as well. Okay, so what they do is the price move up, comes down, and we can see it haven't break the trend line, the downtrend yet. Okay, sorry, the uptrend yet. They haven't go through the line yet, so the price bounced back up. Move, and then we can see that this is sort of like a good sign of strength, because we can see when the price starts to come down here, okay, you see the volume is quite high. We can deduce that smart money somewhat is supporting this price here, and they are very bullish. They want to push the price further, so they buy where the people are selling here, and they buy some more, and we can see supply activity is getting less, right? And we have a small body here, and then we can see this side here, which is a what you call this a 2-bar reversal in a way, right, where the volume is low and the next bar the volume is high, and then we can see the price starts to make this up move already, right? And here also on what we saw on, what was the date today? I think it was 2 days ago, on Thursday, when the US announced of this top glove having an issue, which Martin have explained earlier, and the price starts to, people start to sell. But interestingly, there's not much people selling here, although the price went down here, and there's not much price moving down here. Partly, of course, the Bursa Malaysia announced there's a technical issues, so they stopped the trade altogether entirely. All right, but the next day when the price, people starts to panic selling, the price comes down over here at this level here. Smart money came in to support, and as people buy, as people sell, he keeps on buying and he pushed back the price up here. Okay, you cannot depend on a retailer to push the price. Normally, the price movement to push the price up requires a lot of effort, and the only people who can do it are the smart money. Smart money never works alone. They always work in a big group, maybe around 3 or 4 people, and then they tap together with some banks perhaps, and also with some of the media to run their thing to push up the price. Okay, so if you want to know how the smart money operates, there is one good Korean drama movie you should watch, which is called The Scam. Okay, it's around 2008 or 2009, somewhere around there. All right, it was on YouTube, and then after that, sudah taken down already. But it's a very good movie. All right, you should watch it. Then you have a better understanding of how the smart money works. Okay, so this is on the top glove, and then we see on Supermax, very classic, very how should I put it, very speculative counter, this one, because comparatively to top glove, this counter just straight away push up all the way through. Okay, and then if you see there's a similarity between Supermax and top glove, right, is that the chart pattern are the same. When top glove have this spring selling, and then here also we have like a one long tail spring also here, selling here also, and you see the volume is high as well, right? And then we have another one here, which is like a long bottoming tail, high volume. Here also the same, long tail and high volume here. So could it be these 4 giants, they packed together to push up the price, to profit from there? You wouldn't know, but possibility is there, right? So this is how we see how smart money works, right? So this is the top glove, and then the next one, and the case study is Pentamaster on your left, and on your right is G-Tronics. Again, we see based on the market stages here, right? We can see the trend is on the uptrend here, so price is probably on stage 2. Okay, in Globetronic, we can see like it's moving on a sideways range here. Now, sometimes the stage 1, which is accumulation stage, it doesn't mean has to be around 6 to 8 weeks. Okay, it can be short as this, as accumulation. Okay, short as this, then smart money will buy at this area here aggressively, and then they'll push the price up. Then we can see it's moving on the uptrend. You can use the moving average also to determine the trend direction, right? But I talked about this on the last Thursday, and you can have a look at that as well. Okay, so the price starts to move up. We do see a lot of strength here, because as the price starts to come around here, then we see a lot of tests with the low volume. Price are testing at this area, then after that there's no more supply, it will push up the price, right? And then every time the price do a pullback, touches back the moving average, and it starts to move up. Okay, of course we see UT, which is a sign of weakness. Okay, UT is a sign of weakness, we call uptrust, but the next couple of bars, they overtake the UT. So in this case, we consider that the UT is a bit immaterial at this particular point of time, right? Same goes in G-Tronics. Here we see this is the first accumulation stage, or stage 1, and we have here one up, going up here, then it goes sideways again. You can see very low volume. This part here, we have high volume, obviously to support the price at the price that they want. They push up the price here, and maybe you may wonder why when the market move up, the volume is low. Okay, it's because if let's say smart money absorb all of the supply in the market, right, and there's no more sellers anymore, for them to push up the price is quite easy, right? If let's say I manage to sapu the supply around 70%, there's still a 30% of supply there. Okay, so for me, when I push up I need to push up a lot because I don't want these fellas to come in to sell. That's why we have like increase of volume. But if I be a dominant absorber of the, or dominant player in that market, right, and there's very minimal supply, maybe like 5 or 6% of it, then I can just push up the price with very low volume. Okay. Then we can see after it push up here, then it accumulates again. You can see the volume is low. It's a sign of accumulation, and the price move up until now. Okay. So this is under the Pentamaster and G-Tronics. And for the futures market we have here is the soybean oil. Okay, the futures market for soybean oil. We can see market came down. According to market stages, it has come down, and it is being supported at this price level here, and market is moving sideways around here. Okay. Then eventually, price breaks above the resistance here, test it again, and then now it has comes to another level here. We can see this is the resistance here, which is also where the price kept down here. Okay. Normally, when the price kept down, you want to wait the price to close the gap, then you it will be a good potential for you to trade for the price to go up. What I mean is that, let's say like in this case here, the price move up, then there's a gap down here. Okay, there's a gap down here, between here and here is a gap. So you want to wait for the price to close the gap. Okay, close the gap, and maybe this will be the area where they will jump up, then they will do a pullback. Then you want to enter somewhere around here. Okay, because reason being is that smart money, every time they push up, they want to retest back again the areas where they push through the supply, right? And to determine if there any more supply left or not. If there's no more supply, then they will push up again. Always bear in mind, smart money, when they push up the price, they don't want any other fellas to interfere in their price pushing up exercise. Okay, so if there is, then they will either abort, okay, or maybe they will go sideways a little longer to absorb more of the supplies. Until there's no more supply, then it will start to push back the price up. Okay, so this is what we see here. So crude oil also almost want to break the resistance. It's still hovering around here. Okay, but if they see it's able to break up further, then you will see an uptrend in the soybean oil as well as the crude palm oil as well. Okay, right. Okay, so this is a preview of the moving average that I did in the last Thursday's class. Right. So as you can see, the moving average also, as I mentioned earlier on, that you can use it as a tool to determine the trend line and whether the price has a momentum in going in that particular direction. So you can see like in this futures market, the earlier one, if I show here also, you can see like this is a going uptrend, a nice momentum here, and same goes with the we call this Pentamaster here as well, right? Being supported along the moving average there. Okay, so in here also you can also follow when the price breaks up here, and we call what we call the railway track starts to open. Then we can see the price move up along together with the moving average there, right? Then is a signal that the trend is good in that particular direction. So in this case, it's an uptrend, it's very good. If it is a downtrend also, it will be the same as well. You can see that kind of direction there. Okay, so this is just a snippet, all right? But if you want to go a bit more detailed, you can go to the video. I think it's already uploaded on YouTube. Yes, already here about moving averages. I do talk about it, all right? And you can just scan here on the QR code, or you can just copy the link here and you can watch it on YouTube to have a better understanding on how the moving averages work, right? So next week also, all right, I will be presenting on next Thursday about a topic called Can Slim, okay, and how a top fund manager makes 18,000% return. This is a truth. I'm not lying. I have seen it, and I also like call Zach. Are you sure am I saying the right number here? You say, yeah, I think it's correct. It's 18,000%. So I will introduce, I will talk about this topic, and I will tell you who is the person that is, who managed to successfully get 18,000% return in that one particular trading. All right, it is verified by one of the big four audit firm, and I will share you his name. Right, so do join me next week Thursday on this particular topic. All right, and Also, a few more weeks to come, I will talk on other topics as well. Okay, so with that, Martin, I will pass back to you. I've come to an end already, so I'll pass back this session to Martin. Right. So far, okay.
You unshare first.
Okay, Jason, is the line change based on actual 18 days or just a range of days? Okay, it's actually based on the high of the last 18 days. That's the 18-day line change, right? We do teach about that in our master class on what you call this, some of the trading strategies about that as well, all right? And so if you are interested, you can just come over, you know, to join our master class if you want to know better about the strategies, okay? Right. What are
Okay,
the...
I want to pass on to our next speaker.
One,
Can you
can
end
go
your sharing?
to my talk there in YouTube. I've mentioned about it, so you can have a look on that, right? Okay. So if nothing much, all right, I will pass to Martin on this. Martin, back to you. I'll just end sharing.
Okay. All right, thanks a lot. Now, the next speaker, I'm only going to bring in the slide. I'm going to get Zach to share. Zach has something interesting to share with all. It will be just another, how long, Zach? 20, 25 minutes? Yeah?
Yeah, I think I would take around like 15 to 20 minutes. Just go through some
good.
of the
Then I will give you a wrap up, a comparison between the two, right? And I'm going to share with you something really great for next talk. You don't want to miss it. Okay, so Zach, take it away.
All right. Thank you, Martin. So, okay, just want to do a quick sound check, please. Is my sounds coming okay before we start? Okay, so for my session is like a pretty quick one. Like we focus today is more on this trading systems, right? Which is trading system that suits you. Doesn't mean that this trading system is good. That trading system is not. Less disadvantageous. Okay, so. For my personal life, for those that who know me, okay, for those that who following in our Facebook there, there's always a few things that personally that I like, okay, when I do my my style, my tradings. Definitely is few techniques, like for example, first is of course the pullback, and then followed by shakeout, and followed by NS. Okay, so let me share my screen first before we start. So sometimes members do ask me among these three different type of techniques, right? Which is the one that having the best setups or maybe give you a better advantage. Okay, but for me is that it actually depends on what type of trade setups you're looking at, and then how many time you have. Okay, can monitor during the day itself in the markets. Okay, of course. Pullback usually give a very good, I can say, rewards. Okay, of course the risk is kind of high too because we are buying in the markup stage, right? Sometimes, most of the time you actually drop below the support pretty fast when you trade pullback, but the reward is very good. But for trade pullbacks, you need to have lots of monitoring. Okay, so if you are those type that have to go to your works, right? You don't have time to monitor 9 to 5, then sometimes it's a bit difficult, right? Shakeout and NS sometimes it takes slightly a bit longer, okay, time frame for the trades to really works, okay, but usually you buy at pretty good support level, right? So again, it's a question that which is the types of trades that is kind of suitable for you. So I think just wanted to do a very quick one using NS over here. I think we got a few stocks that we can look at, okay, at this NS screen on 17th of July. So for example, like for our members, right, I think you can actually look back into past 5 days. Okay, the reason why I look into past 5 days is because sometimes the trades haven't really breaks it. Like for example, like I said, NS sometimes when it appeared, it takes time for them to break above the resistance. Sometimes 1 week, 2 weeks, some it's like even 1 month. Like for example, Vision, like for example, SP30, all these kind of trades. All right. So okay, let's do a quick one. Okay, just wanted to show you the trading systems that most of the time I like. Okay, I got Comfort. Okay, I think one of members do highlighted, right? Comfort actually come with 2 different NS, okay, in just 1 week over here. So let's take a look into confirm. Okay, now for those who don't know, NS actually is a signal that tells you that at this particular moment, okay, there's lesser sellers happening at this price level, and this tells me that when the lesser sellers happens, most of the time smart money are interested to at least try on the resistance. Okay, so like for example here, of course this is in a very nice uptrend. Okay, this is a bit similar all the glove. I said this one haven't really breaks up yet. Of course, background wise is good. Okay, we have a pullbacks or almost a month here, which is nice, and we got a green pentagons. Okay, hopefully they're going to cross here soon, which is they already did. Okay, on Friday. So NS, okay, at the 2040s, okay, I think it's for moving average. I don't want to cover about moving average since my colleagues already helped me to cover it earlier on by Alif, right? So okay, we got big UT, but this UT is not confirmed. Okay, so look into the NS, 2NS over here. This tells me that actually the support is kind of solid. Okay, so if I really want to trade, I immediately know what is my trading plan. Okay, where's my stop loss, where's my profit targets, okay, all these kind of things. All right. So one trade, okay, one trade. So we got it ready for next week. So let's say I'm really interested. Again, I always try to get myself a good price. So this is some of the things that usually I will ask my members to do. Doesn't mean that when you see confirm NS, you need to jump in immediately. Okay. So sometimes some of the stocks, smart money do kind of enough. Okay, to give you a very good entry price because they need to try lower first. Okay, before they try at the resistance. Okay. So let's try CN Asia. Okay, today just like I say, just going to focus on NS. Now this is a very good setup. Okay, this is a very good setup. Now the things that I like about these stocks is that I don't think I see a lot of news regarding this stock. Like I say a lot of times, right, when we trade using VSA patterns, okay, we tend to don't want to have lots of news or maybe a lot of rumors or probably a lot of people talk about it. So the quiet it is, the better it is. Okay, so if let's say the stock is like very quiet, moving up slowly, I kind of like that. Okay, like for example, I still remember this YNH, okay, property. It's going up a lot, okay, since last year, okay. Since here, 1.1 areas to the top over here, 2.7. So let's try how many percent. And if you notice, a lot of people talk about euro, all these kind of counters, but this YNH is like very quiet. At the time, you remember SM track, okay, also very hot at the time, okay, last year, right? This SM track is like very hot. So this is something what happens, right? When the stock is too hot, okay, smart money distribute easier, okay, because they trap all the buyers, to trap all the weekend holders at the top, and then distributes to them. But if let's say the stocks is been moving up quietly, okay, this is actually shows that the market actually got a lot of strong hand holders in this stocks currently. You can see until now still at these reaccumulations, a wrong period reaccumulations. So let's try against in Asia. Okay, so a few things that the reason why I like quiet markets, okay, I like quiet stocks. There's a reason why. Okay, so if you look into this trade, first line change followed by NS, okay, subsequently support breaks and we got NS. So immediately you know where's the support is. Okay, again, doesn't mean that this stock will 100% goes up. I didn't say my system here is 100% is winnings all the time. But what I'm trying to say is that these setups, okay, currently give me a very good edge, okay, for me to consider for next week. Okay, so let's try again. Pipe. Okay, this is consumer industrial consumer factors. Okay. Well, this one's slightly a bit inactive, so this kind of stocks somehow avoid. Okay, the reason why is simple. This type of stocks easy to buy, difficult to sell. Okay, so avoid. Okay, Palo kind of interesting. Okay, Palo is a combination because it's actually doing some sort of shakeout right now, and at the bottom actually it comes with 2 ends. So again, I leave up to you whether you want to enter first or not. Okay, so for those that remember who attended the masterclass, right, you know the shakeout rules. So make sure you apply that. Okay, so sometimes I will apply both techniques, like for example NS followed by shakeout. Okay, if let's say I'm able to spot it. I think the best example is revenue. Of course, revenue haven't really started the markup stage due to these few days the market is kind of weak, right? So let's see how next week. All right, like for example here, green pentagons. Okay, so it tells you that okay, volumes is in. Okay, so it seems like we're going to be ready anytime soon, and then somehow they go back to supports again. Okay, but look at this supports. Okay, the volume is very, very small. Okay, and best is that it can't be no NS at all. Okay, so it can't be NS. Okay, two NS. Okay, again, if you look into my the other stocks just now, Comfort. Okay, two NS also, but Comfort can be slightly in the uptrend. Okay, use the 2040 rules to help you out. Okay, like Alif just explained earlier on. So Palo, the 2040 is not that nice because it's still doing a shakeout areas, but it can be two NS. So again, leave out to you. Are you trying to buy at shakeouts area, or are you trying to buy the options area? Okay. So any questions so far? Okay, any questions? I think it's within this screen is one day I got already few stocks to look at. I think Comfort's kind of I'm kind of comfortable with Comforts because of the overall setups. Okay, Palo I will wait for a while. Okay, I'll wait for a while. So let's try Marsing. Okay, Marsing I was waiting for the green pentagons. Okay, so this is again a nice NS area. So this is the one that building a nice reaccumulation. Okay, so for members, like I say, for members who is kind of busy throughout the days due to works, kind of monitor, maybe you're gonna grab some of those kind of stocks. Okay, you don't have to do a lot of monitoring, just buy and park your alerts. Like for me, this is the previous NS. Okay, before this NS, this is the previous NS. So I was monitoring this area. Okay, so let's say this price drop below this area and I need to cut. Okay, if not, just going to hold during this accumulation. But again, accumulation takes time. Okay, so different setups give you different type of sort of advantages and disadvantages. Okay, so you need to see which one fit you the most. Okay, so now NS happening. So over here again, applying the 2040 rules. Okay, in very nice trends currently moving up slowly. Okay, so if you want to, you can look into the weekly charts. So weekly chart do tell me the same things. Okay, I got a big volume, kind of what change in trends, right? It looks like a change of trend for me, and then it's slowly going back another NS in the weekly chart. Okay, but weekly chart haven't turned to green pentagon. So again, for those that who are looking for like really super long term want to buy, and then they want to wanted to hold for like 3 years, 5 years, 10 years down the road. Okay, maybe you want to follow the green pentagons. Okay, so okay, any questions so far? Heard TT but don't know what it is. Okay, what is TT? Yeah? Okay, how to determine UT is confirmed? Okay, when the bar is closing lower. Okay, so let's try any other questions. Okay, no questions. Then probably if yes, I'll look into some trades. Okay, if not, I'll look into the previous day. Okay, so like I say, one day itself, we already got few stocks that we can monitor. Okay, okay, let's try on 16 July. Is it we able to spot any other good counters or not? Okay, so Bursa, NS here breaks up. Okay, close over QT. Okay, so simple and nice. Okay, simple and nice. Okay, so over here, red pentagons, what they do a pullback, just like all the glove, right? If you notice, all the glove are doing these things too. Now they are having a very nice confirmations with the green pentagon. So continuation and confirm support with NS. Simple as that. Okay, so 16 I don't think have much because only got one Bursa, but it's already break up. So most of the time they like to buy breaks up. Okay, then breaks up. Okay, K&M kind of interesting, but no green pentagon yet. For those that who want to do a quick trades, okay, you can look for that and Permaji as well. Okay, K&M. So like I said, I just focus a lot on NS. Okay, because NS is the one that will give me lots of very good risk to reward kind of trades. Like for example, right, I know it's difficult to get 215. Okay, I think Banks is queuing right at 215. Now sometimes if you want, you can chase up. You can chase up 220. So let's say assuming you chase 220 and you close below this NS bar over here at 210, you are risking 5 to 6%, including your fees maybe 6%, right? So but if this trades works, okay, and if able to try the next resistance over here, 250 areas, okay, you are getting around 13%, okay, so which means that you're using 6% to get to 13% or maybe 12%, Okay, so I always try to go for my risk to go 1 against 2. Okay, I think it's for those that follow me in Facebook, advanced call emulers, I think like Sedania, all these style counters. I just follow these simple rules. Okay, simple systems. Okay, NS, that is 1 against 2. Sometimes best is at 1 against 3, but of course now kangaroo markets, sideways markets, I go to M1 against 3, 1 against 2 for me. I'm kind of satisfied with the discount method. Okay, last one, Permaju. Okay, any questions so far? Do let me know. Okay, Permaju. Okay, by the way, just want to check is Dr. Derek and Mr. Hari is here. Okay, this one also not green pentagon yet, but for those that who want to do a quick trade, you can do so because hourly do turn to green pentagons. Okay, or somewhere around this area. So now it's turned to red. You can wait for the green pentagons again. And as a support, okay. So if you want to enter, you know where you should stop loss this, okay? Or probably you want to focus on Canon first, okay, before Permaju. Oh yes, Dr. Derek is here because Dr. Derek got some questions for me. So is it okay I answer from here? Okay, Dr. Derek. So before I pass back to Martin, since that I always like to have answer members from here because I got chart. Okay, sometimes text is like I sometimes probably I fear of miss out some of the important things, right? Okay, ING. Let's try ING. Oh, good volumes. Okay, good volumes. So sometimes you want to see clearer, we look into. Okay, this is good. Okay, this is good. Okay, when the bottoms come with volumes, okay, and then there's some higher volumes, okay, at this week, this is tells me that support is bottom is there, potential reversals coming soon. Okay, so ING is nice. I kind of like the volumes. Okay, do take notes, but I don't think the hourly chart can show you any signals because no much activities. So just maintain with the daily chart. Okay, so this is kind of good. SMRT, I haven't really followed for quite some times after this UT bar over here. So seems like it's going back. Okay, so this is the one that we do share in the masterclass that actually form a very solid kind of box patterns. Okay, so somewhere around here. Okay, so this kind of trade you need to hold. Okay, but it actually pretty close with supports. Okay, if you look into this kind of setup, it kind of remind me like Sabah, KNM. Okay, Sabah and KNM, or maybe like EcoWest and IWCT type of setup. Okay, actually from box support resistance is pretty clear. You buy there, you wait. Okay, you buy there and wait. Okay, Minda. Anyway, Friday, lots of good penny counters start to move right. DGB Asia always my favorites. Orion is the next one that I'm looking at too, and Sinohuan. All right. So well, again, let me remind you, this is not buy call, this is not sell call. This is the channels to share with you how we use the volume spread analysis to our advantage. Okay. So Minda, okay, Minda also resistance is there. Again, a big UTs, big UTs. Okay. Now let's say give it a choice. I think I prefer LNG. SMRT, but SMRT need to wait, okay, because of this big UT here. So sometimes I tend to look for stocks that with lesser UT props. Okay, Kangaroo is good. Okay, I think I do a quick check just now. Kangaroo. Okay, breaking above already. I think this is similar to DGB. So I think Doctor, this is okay, but just try to get yourself a good price. That's it. All right. Any others? DGB. Okay, let's try DGB. Okay, this one also for those that who missed already. Now this is very clear for me. Among all the pennies counters, right? If you look at this, right, breaking above accumulations, pullback, no uptrust, pullback, no uptrust. Okay, and now my change coming in. Okay, so sometimes I tend to like I say, so times I'm type of traders that are kind of lazy. Okay, so sometimes all this like zigzag, I tend to ignore it because too many noise. Okay, I tend to look for something is clear for me. When I look at it, I know what should I do. Sinohuan, no uptrust. High volume, up bounce. Pentagon is there. All right, simple, clear, nice. All right, again, let me remind you, this is not buy call. Okay, I did not ask you to buy next week. Okay, because it will fail. The chances fail is there, right? But learn to read the volume. At least this to give you your advantage. Okay, when you want to trade. Okay, hopefully I answer your questions, Dr. Derek. Okay, so let me know any other questions before I pass back to Martin. Is shake out and wash the same? Well, technically it's the same. Okay, shake out and wash, but depending on are they doing 1 days, 1 weeks, or month. All right. If there's no questions, then I'll pass back to Martin.
So Zach, can you make me a I'm just going to share screen now. Can you end your screen? Okay, you can see me, right? Can hear me? Okay. I noticed, Jason, you have been following us for a while. Okay, I hope you have learned a lot more from a little bit of our coaching. Whenever you're ready, do consider our masterclass, okay? Because this is the third part of the presentation. I do know sometimes learning on yourself is good too, right? Like I did, but lost a lot of money, right? The whole point is to able to move faster, just like, you know, we all have our teacher, okay? Myself here, you can see a picture of me and Tom, just like those guys, Curtis Fay, Michael Carr, and Russell Sands. So let me just give you a wrap up what we have just summarized in here today, okay? So you can see this screen here, right? Can see, right? My screen, no problem, isn't it? Okay, so good. All right, so this is, so a summary, if you look at the total trading system, we call it the TT, this one versus the VSA. So in short, TT is a simple breakout. Simple breakout, you can take a photo of this with 20 and 55-day moving average, and a simple 10, 20 days sell-off, which a reverse is a sell-off. So you just do the other side. And TT is a trend following, okay? And because of the trend following, now remember, in 1984 to 89 was a very, very good year. Everything trends up nicely. But right now, if you notice the last 5 to 7 years, how was our trend? How was our Malaysian trend? What do you think? Our Malaysian trend, anyone, those of you who are listening, right? And those of you, how was our Malaysian trend? Very hard to find trend, to be frank with you. So a system like a trend following system will whipsaw a lot. That's why it is less in volatile market. But the thing is that once its trend is following, anyone can do it. So we find it, if you just follow purely on total trading over the last 5 years in Malaysia, you will lose money. All right. As such that you need to modify. And that's why we modify it, the total trading system with volume spread analysis, we are able to survive. Now, if you look at the precision that was done by Arif, if you look at summary, the volume spread analysis look into the basically following a smart money, okay, which means we buy early January in stage 1 accumulation stage or trade stage 2 trending share. This is available in Smart Robbie. Remember, we are the Pentagon Guider. And again, we want to know that some of you who want to learn a bit more about accumulation stage and trending stage, we have definitely a system. Now, the system in here is what we call the VSA plus the modified trading system, and that is the Pentagon. So Pentagon Guider, like it or not, it's over the years, me being, remember when I was young, the time year 2000, it was my obsession, you know, with total trading and whether we could make money. Because I do find out that total trading system, okay, it's only trending market, but during the sideways market, mati, si kiao kiao. So I need to have something. So as such that we have modified it using volume spread analysis, which is very good. And it becomes the Pentagon trading system for what it is today. And it's on Smart Robbie for free. So as I said before, if you use after hours, it's free. And if you want to use it daily during the breakfast show club show that we do, you can simply just get it for, or share it with friends for download for free. Okay, so this is why again in the kangaroo market, the total trading system don't like. Now, which one do you all like? Can you all type that in? Do you like the total trading system or the VSA? This is just I want to share with you. All right, the total trading system or the VSA? Can you type it in? Which do you like? How about some of you who are not members, especially the public? I think Jason, you are not one of our member yet. What do you think? Which do you like? The VSA or the turtle trading system? Okay. Okay, good. Thank you, right? I think the whole point is what we really want to do is to combine, take all system, the good one, we take it piece by piece, and then we make it to what we have today. That's why Pentagon Guider, it's patented, right? To be frank with you, there's nothing really, something that I invented from a secret box. It's all those rules, the back testing, the little small things that we do, and we combine it and we make it into the turtle trading system with the VSA. And that's what it is today. Okay, so great. Some of you who are really listening, and thank you for your time. So let's move on now. Of course, we have some tutorials in here, the 80% win rate. I know many of our members here want to win very big, 80% win rate if you follow the trading rules. And we have a tutorial on the YouTube. Just look for this picture here with a picture of me. And there are 4 tips how to win more than 80% in the KLSE share trading. So make sure you watch that one. I think some of you like this. Now, if you see this, okay, let me just go back. Right, I think this one is, let me just bring it down for you here. Okay, now hang on, just give me a minute here. I'm supposed to do this. Okay, so now if you look at the Trade VSA trading ideas that we have, Supermax Kosan, this was just last week. They are able to pick the line change, and you can see you can make it. And one of them was micro-link, which I have actually, if you look at it, which I have. I bought it a bit earlier on, and that one made about 100% for me. So Frontcan, I also have it, and Frontcan also started to run. So this is my own account, not a big one, but I'm pretty happy I got a gold ball in here, 100% return for that one. And you can do it too, if you have the Pentagon Guider and also have the right skill. Now, these are some of the example usually I flash on. You can see in our Trade VSA screener, those of you who have it in here, you can see 21st of February. And if you just follow the Pentagon Guider in here, 50% return on 5,000. Like the one I just done, it's 100% return. So that's not bad, pretty nice one. And this one, a 50% return on $5,000 trade, give a $3,000 5 with the Pentagon Green Guider buy. And then here's another example is the, what share is this? Is Euro holding, right? This one is fantastic. This one went up for 450%. Not to talk about the one we talk about, Top Glove. Remember Top Glove? How did that one fare, right? Top Glove fare even more, isn't it? Right? If you caught hold of it, Top Glove. My Top Glove, I still have it. I bought the warrant. It's a 2,600% return. I still have it and running it now. I bought the warrant, right? But again, small amount. I didn't buy big, so percentage is big. A couple of $1,000s, which is very good, right? And the one that you saw that too. So this is why we find that I think it's very important right now we have this bull market. My message is very simple. You can see this trade here, 450% return, giving it $22,000. You will strike gold. And more importantly is, are you willing to put in the time? Now remember, we coaches, myself, we've been putting a lot of free information. Why do we do that? Because we want you not to miss out. I think many of you continue to come back and listen to us. We really thank you, and also for sharing with that too. All right, let's move on to the next example in here. The next story is the Japanese CIS trader that shook the Nikkei market, right? I was going to talk about this, but due to the time frame, I want to finish within 2 hours. I think some of you are already tired here. I will cover this, I promise, on my next talk, okay? All right, and this is a very interesting story which I want to talk about. And he's also a Wyckoff trader, a VSA trader, and he hide his face. You look at that one. Look at the picture down below here. All right, and I have to hide my cowl so the Japanese Yakuza, organized crime members, don't kidnap members of my family. That's right. Okay, so that is how he has been so afraid to really go out in there, right? So at the end, if I'm going to cover this back, and a little bit also is a philosophy. So if you go on to the next one, and this is what I actually prepared, but I was going to just don't have time to cover it. I will talk about it on the next CIS trader. So I want to start here, right? So my question to you all, start early. Please start early, get a proper plan to get educated. Now, how have you been doing during your COVID-19, right? There was fear. I think many of you have gained new knowledge, isn't it? Get new knowledge like what we are sharing in here. Find a way. What we do, many of our members who eventually join our fraternity, and they have moved, and we cover them, we teach them over Zoom, you know. We don't turn away from our responsibility to educate many of you, and as we continue to do so, right? And what we are doing coming August, now do take note, we have a session every 2 months. So which means those of you who are signing up for our masterclass, right, we actually have re-attended. Now, just want to show of hands, how many of you are interested? Of course, no obligations. How many of you are interested in our masterclass? If you're interested in our masterclass, just type MC, okay, masterclass. Those of you interested in our masterclass, right, and you want to find out more information, how you can get started, educated, and early, do type MC there, all right? Okay, so now the next one is a bull market in here, desperate. And we are in good times. What I'm saying, in the market, this thing go up, we will do so. Now, a lot of people talk about, hey, what happened if Malaysia technically, you know, not sound and economy not there? That's why the masterclass will include the US trading strategies, all right, which is what we will talk about. The new topic for the masterclass for August, remember it's August 8 to 10. Right, this is the one in here. Those of you who are interested, so you know, do text us, and we will get. Of course, we are not going to, you know, force you guys into, because come again, we're going to be doing another talk. You can learn some more, and we find that at that time you're ready for a master class where we can put more. Because what I'm trying to say, as our so-called coverage of the information get bigger and bigger, there are lots of questions, you know, coming to you, how to do this, how to. We are willing to happy to help, but remember, we give priority to our masterclass students and to our fellow members. That's about it. If we can, we want to help. Especially, we have this lady, Jean Xiao. I think she's very elderly. I always want to help her. She said that she couldn't get a Pentagon working. She couldn't get the handphone working. But I told her there is a number, Jean, you can go and see. It's a UOB, Kehang people, right? You need help. Okay, go and get help. Else, the market will take the money away from you. Correct, all right? Yeah. Okay. So this is, you know, very important. Okay. So move on. So the best solution, just like Tiger Woods in here, right? He's ready for the master. You know, what is your real objective in investing? Look, we have seen. I will have a chance to talk about CIS trader, and he's one of the traders, just like Michael Carr, just like, you know, Arif and Zach. Their trading is actually, like myself, very simple. To have a comfortable living. You know, just like when I was young, the time you saw a picture of me, the handsome guy, right? I wanted to make more money. And I think going forward is a small investment on your time, and you get educated and you get coached. Just like Tiger Woods, he became so good, he's ready for the masters again. Okay, so if not, use our Smart Robbie, which is free too in here, and we'll do a Bursa version for our Bursa friend there. We will have a Bursa version in launching in September too. So take note. Okay, so the post-COVID, right? And remember, unlike all the other seafood, my student who went out and do, a lot of them are one-man show. Okay, yeah, you see all the three Malay trainer, right? And then the three Chinese one, they're all one-man show. I told myself, if I'm going to go forward and teach you, just like Tom have a lot of students. Remember what Iris shared with you, the student he passed on the knowledge. For me, same thing. I pass on my knowledge to my fellow student here, my coaches in here. They come under me. I train them for like 4 or 5 years, right? We have trainee too. If some of you who are really interested, especially your children, you know, children, do get that. We have a family package. Zach, we have a family package, isn't it, right? Yes, the masterclass course. Zach is going to follow up with you, right? We have a family package because we finally feel that you and your children should come and attend. The August one, we'll be doing a physical. Now, should be okay. But physical, we can only do small class only. We cannot do too big. That's a problem too. So we have to make arrangement in here so you can see we do futures also. Like Marina and Ari will do the futures market. We'll teach you too. Another way to fish the market. You get $500 profit in one day. Of course, not all the time, but if you do it right, chances is on your side. Okay, good. Now, in the past, the pre-COVID, you know, we are face-to-face and, you know, we have a lot of fun. But the post-COVID, we will do Zoom. Having said that, all Zoom but physical is possible, but very limited. So we try to manage this physical face-to-face. A lot of people want to, touch and hold Arif hand and hold Zach hand. I'm going to be there. We can shake hand and have a cup of coffee or Milo too. Okay. So that was also good too. Okay. And this is, so take down the dates, August 8 to 10. So at least on August 8 to 10, we won't be doing our usual Saturday one. We'll be doing our masterclass. Again, we have all the screeners that Zach shared with you. Remember, Zach, it's very hardworking, Monday to Friday, going through you with all the stock pick. For me, Monday, Wednesday, and Friday morning, 10:15, I'll go through it, and Arif on Thursday. So you have our team totally at your disposal. Okay, and it's totally free. You don't even need to sign up for the masterclass if you're not interested. But of course, having said that, we want to give you a better service, right? And we want to do that and get you to committed for a 1-year mentoring and coaching. And that's what our masterclass is all about, with free receipt and re-attendant. All in all, you get to attend at least 5 or 6 times of our masterclass. It's really a good deal. No other Sifu is doing that. No other education provider. And we have a team to support. That's how we want to differ. Because I say, if I want to do it well, what Tom shared with me, what Tom teach me, I want to do it better for you guys. Okay, so something you want to think about. So we have a very special price today. We will give you 1,000 ringgit off, I believe so. Okay, so that's a number there. 010266. You can text. Zach is on that line. But most important is mark off your date. Okay, August 8 to 10 and 12. Of course, most people ask me if August not available, when is the next class? October. That's right, October. But remember, you paid now, you attend October, so you can attend. The reason why I tell people right now, November 2020. What is happening in November 2020? Right, November 20 is our election. That's right. And also year end, I think we're going to get snap election January 15. So it's good to get the skill up and get into the language we talk about, whether it is Turtle trading system, whether it is smart Robbie, Pentagon. I think that's important because that is a proven way to trade in KLSE and more. Okay. So with that, I will end my session in here. And don't forget, another great talk next Saturday, starting next Saturday, is what we call the Market Compass 3 series talk. Now we extended to 3 series talk. Okay, completely free, and do share it in your timeline too. It will be a talk. The first talk will be on the 25th of July. That's why I said, if you don't come for masterclass, no problem. We still do free talks for you. Master Compass 3 talk series on the 21st of 25th of July, Saturday 2 p.m. same time next week, next Saturday, this coming Saturday. We will talk about the next trend sector to watch out for. Then on 1st of August will be the stock to watch out for next year and 2020. We will also include the US market because we think that many of you may come for our masterclass. Okay, masterclass. So we're going to prepare that one, the local stock and the US stock. So who knows, if you invest, many of you are fundamental, isn't it? Trump will go to jail. That's right. Yeah, that's right. Yeah. So Trump won't go to jail. How can Trump go to jail, man, if he loses? Okay, so the third talk will be how to time your series, very similar to what we talked about, including the CIS trader who makes $1 billion. All right, so we use some of those techniques. Of course, we will just sort of share with you method 1, method 2, method 3, but use the most simple one. And of course, our coaches, Arif, Zach, and myself will be with you for our Market Compass 3 talk series. Wonderful, wonderful information we'll be sharing and accept free. That's right. No charge at all. I know some people, vendors or some other provider, they charge maybe a few hundred ringgits here and there. But we felt that as a public service to the public, and many of you who has been very kind, sharing this video series, your members in here. And the final one will be on the 5th of August before we go for the main course, which is the 8th. Okay? So take note, Market Compass 3 talk series will begin next Saturday. So get ready your notes, your pens, and we will find the right sector to invest, right sector to go in for the US market and Malaysian market. So all of us make money together. How about? Okay? All right. Okay. Jean asks why I repeat the same thing again. Because it's important. Repetition, very important. If you want new things, you come for the masterclass. Most of the things we talk about here are relevant to sectors and to the sound. So good things we need to repeat. Just like, remember, discipline and focus. Keep repeating. Remember, when you go to school, what do you always do? If you cannot do one thing right, like getting the stock list right, you need to repeat. Repetition is the best to train our brain. Okay, now if you think what I say makes sense, give me a thumbs up, because repetition is the way to trade. It's not about all the new things. Okay, like how I train my coaches and how Turtle Trader trained by Richard Dennis is the same way how Tom and Bill Vermine trained me too. Repetition. Okay, thank you, YS. Okay. So those of you who has typed in MC, right, masterclass, or there's a number there you can call back. This is a number 0102669761, and Zach, my senior trainer, will help you with all the details about the 1-year coaching and mentoring that we will give it, and we do our members training in here, and we will do more to help you to move you to the next level, if and only if you want it. Right? If you're not ready, come for, very simple, the next talk, Market Compass 3 talk series, or if you got bored of us, then just use Smart Robbie. You don't have to hear me or see me. Else, that's all I have for today. Thank you for your times, everybody, and I'll see you Monday. That's right, Monday we will continue with the breakfast show, Money Talk with Smart Robbie at 10:15. Okay, bye-bye. I will end here because some of you, I will end here. Some of you may have some question you want to ask Zach about the masterclass. Okay, so there's some information. Zach is going to be here to answer some of you, and also Ari. So with that, I'll see you on Monday.
Okay, thank you, Martin. So for those that who interested in masterclass, okay, I will share with you the info later on. But for info, actually, our physical class, okay, for August, actually is full, okay, because like Martin said, due to this COVID, okay, to the COVID, right, we can only have a small class. I think it's like around like 15 to 20 people, okay. So, but don't worry, okay, you all still can attend to the Zoom sessions, okay. Probably let me share with you all this first. Okay, because just now I think so I got a few of them are asking me, right? So probably let me answer you from here. So like I said, okay, maybe I show this event first, upcoming events. Okay, the upcoming event, of course, 8 to 12, okay, for 10 and 12 will be live tradings. You can see for the timing from here. So the upcoming one next after the August, it will be October, 3rd, 4th, 5th, and 7th of October. All right, so like I say, for August temporary, this physical class is full, okay, because we only can fit around 15 to 18 people in the rooms. So you can still attend the Zoom sessions, but don't worry, you still can re-attend again on the next upcoming physical sessions in October. Okay, so again, priority is for our new members who haven't really attended the masterclass yet. And we actually increase our frequency, okay, for masterclass. Okay, previously we only planned 4 times in a year. Now we try to plan 6 times in a year, so that everyone got a chance to join a physical class. And of course, for those that are members who are looking for re-attend, also can join us. Okay, hopefully, okay, after the October sessions, okay, you all can join a physical class soon. All right. So do let me know any questions that you have. You can contact me at my numbers there. I will try to reply you later on, okay, with some information. If you need some info, you can look at this. Okay, if let's say you're interested on the combo plan, actually it comes together with 12 months. Okay, 12 months membership. Of course, today, like Martin said, we got a special price for you, the early bird price for the August intake. I will share it later on. Okay, just text it to me. All right. So if there's no any questions, probably okay. Let's see. Ali, you got anything?
Sorry. Not really, but just for those who are coming for the master class, because as mentioned, it's already fully occupied. So the next option will be online, which we will do via Zoom, and you'll be handle more. I think 100 people, right? Like for the Zoom one, right? Yeah. So yeah, if but of course, in October we hope when we do the repeat again, means that we will circulate out the notification, and those who are able to attend the physical class will be better. So I would prefer for those who can attend physical, so at least during break time or whatever, can have a direct access to us coaches. We also will be there to assist any members have any queries for that matter. Okay, or you can see like myself or Zach, Marina or Fu to ask further about this one, right? So from Syahrir, how to join next webinar on 23rd July, I believe, Syahrir, this one I believe Zach will set up the link, okay? You'll be able to see, but normally you'll be on live Facebook, okay? Sorry, this is next webinar on 23rd, next Thursday, yeah. It'll be on live FB, so you just make sure that on Martin TF Fong at around 9:30 PM, you just make sure that you're ready by then lah. Say lepas solat Isyak, makan semua, then you can get ready by then. Okay, so I will next week topic will be about Can Slim. Right, dekat luar there are people who are talking about Can Slim and so on, so I'm going to put it in a summary about how Can Slim works and whatnot. Okay, right. So I think I have nothing much to add. But last but not least, if those who are interested to open a CDS account or a trading account to trade stocks, or to open an account to trade a futures market, all right, you can contact me. I'll just key in my number in the chat later get response here, or you can WhatsApp Zach also. He will direct you towards me lah for this one. Okay, right. I think that's all, Zach. I'll pass back to you. Zach, tak ada, boleh dengar your audio, is it? You got pasang that one lah. Is it this one lah? Really can't. Okay, now